Hey, what's up guys? Kevin Cage here with another crypto update. I hope you enjoyed today's video and let's get into it. Alright guys, I hope everybody's doing well. I wanted to start things off going over this thread because it has a lot of important statistics and information to keep that big picture view. So first up, regarding tokenization and different estimates even this decade. We have Swift estimating that volumes of tokenized assets could reach $24 trillion by 2027. We have BCG estimating by 2030 the tokenization of global illiquid assets could reach 16 trillion to as high as 68 trillion. And the overall tokenized market is estimated to be 10% of global GDP by 2030. And if global GDP is approximately $107 or $100 trillion plus, 10% of that right there is about $10 trillion. Now in 2022, cross-border payment flows were approximately 156 trillion. And BCG believes this number is going to be growing and estimated to reach $250 trillion by 2027. Now when it comes to tokenization, we're typically thinking of the world's largest asset classes, but when it comes to the estimates of BCG of 16 trillion to 68 trillion of global illiquid assets becoming tokenized, this could be a variety of things, and brand new types of assets and even industries being monetized and assigning value, and then of course liquidity within those markets. So that's why I get excited about the future of tokenization of globally illiquid assets in new markets, because they've never been able to really assign value and trade these assets with liquidity between different participants. So for example, intellectual property, IP, copyright, trademark. That's a huge industry even in the S&P 500 alone. So the S&P 500 is valued at over $30 trillion, and 30% of that value, or approximately 10 trillion, is intellectual property alone. So there's a lot of Fortune 500 companies with huge IP portfolios such as Porsche, and in weird cases like Porsche, their intellectual property portfolio is larger than their current market capitalization. And it goes well beyond just IP. We can talk about tokenization of real estate and total value represented on chain, all types of lending products, DeFi, etc. And we can see some of the world's largest asset classes: the equities market 100 trillion plus, global bond market over 100 trillion, global real estate, commercial and residential 300 trillion. The global derivatives market, highly intangible, includes futures, swaps, options, all types of products, 1.2 quadrillion. And then the global commodities market, 23 trillion. Precious metals, oil, livestock, grains, rice, fertilizer, etc. And just taking a look at the total crypto market cap sitting at a mere fraction of that value of approximately $1 trillion today. So this is the total crypto market cap on the weekly time frame since 2013 up until present day, sitting in this ascending channel. We went from 800 million to 16 billion as that high during 2013. Another multi-year bear market until the next bull run, 2018, reaching a high of about 845 or 850 billion. Another multi-year bear market, and then headed to $3 trillion for a new all-time high market cap in 2021. And since then, we've been in a super brutal bear market, especially for altcoins. And I also plotted the Bitcoin halving dates down below with vertical lines just for reference. Whether or not you believe the Bitcoin halving dates are valid after they've occurred already 3 times in a row, a lot of people believe this time could be very different. And at the end of the day, we're all speculators, whether Bitcoin takes off well before the halving and then does a crash for the first time in history, whereas other people may believe that Bitcoin is actually going to be in a bear market until well after the halving. I think it's important to prepare yourself for all types of scenarios, but always prepare yourself for worst case. If Bitcoin absolutely takes off, I'm positioned. But looking at the macro or the big picture view, I believe the total market cap for the crypto asset class grows over the years. And here's a quick list of different industry sectors that will benefit from distributed ledger technology. And just remember that not all DLT is the same. Some are permissioned, some are permissionless, some are hybrid, and each one has different trade-offs. And what makes DLT such a big deal is it can basically impact every single industry sector you can think of, between supply chain, logistics, provenance, Internet of Things, healthcare, retail, e-commerce, traditional finance improvements, lending, real estate, media, NFTs, or just any type of certificate of ownership, IP, manufacturing, music, payments, gaming, identity, security, energy, any type of storage or rendering, and dozens more with new use cases to come. So as I said, there's public, private, and hybrid types of networks, and each one has different pros and cons. There's typically a trade-off per the blockchain trilemma between security, decentralization, and scalability. And as we know, the largest market in the world is the enterprise market, and this is the least penetrated market in the crypto asset class. So the point being is we have not seen true utility at scale. Heck, we can't even get regulations. But I believe many enterprises and governments value privacy per HIPAA compliance and all types of stuff, so they're going to be using private networks, hybrid chains as well, and some may still connect to a public DLT network. And with future estimates of tokenization, it's not a matter of if, it's just a question of when. So what are the benefits of connecting to a public network or maybe even a project in the top 100 on CoinMarketCap? Well, first up, in today's ecosystem where there's basically no trust at all in banks and governments and all types of institutions, transparency, trust, and decentralization is super important. And the benefit of these organizations want to plug into a public network is for better security. It's immutable and tamper-proof. And if you have a private network and you're connected to the public network, if you're running on both, this is actually super helpful because you can actually have a second audit trail that can be cross-referenced with your private instance. And another benefit of connecting to a public network is typically better liquidity and opening it up to a variety of participants. And across the board, we have the world's largest banks, custodians, and exchanges like NASDAQ claiming to launch crypto trading desks. So you can see some of the AUM included: BNY, Fidelity, Charles Schwab, State Street, Goldman, BlackRock, NASDAQ. We can see SIBO with crypto leverage trading. We have Singapore's largest bank also on the HBAR Governing Council. We have Bank of America, Citigroup, Morgan Stanley, UBS, and even JP Morgan as they're building their own private solutions and simultaneously bash Bitcoin. We have HSBC and Sberbank, which is the largest bank in Russia. Now, some of these groups made announcements in 21, others in 22, and then some were a lot more recent in terms of crypto trading desks, like HSBC and Sberbank. And even JP Morgan earlier this year saying they would be launching a crypto fund for their clients. And of course, we have tons of new institutional players applying for Bitcoin ETFs or exchange-traded funds. So there's two types primarily: physically backed ETFs and futures-based ETFs. And I'm very curious to see when and which Bitcoin spot ETFs will be approved. I believe they're approved, I just don't know when. I just think it's a lot more likely that these leveraged future ETFs are approved first. And this could lead to increased price manipulation, but this is not necessarily any type of new thing for us. All markets to some degree experience price manipulation, especially as they're maturing. And I think we're still going to see the same thing as we've always had: choppy, trendless months or never-ending bear markets followed by crazy volatility and large bull runs as always, and then a huge crash. So I just wanted to say mad respect for everybody that's going to be here for the long haul. We have to weather the storm to reap the rewards. And I believe, not financial advice, this is one of the biggest opportunities in our lifetimes. And I don't want this to sound too hypey, but you have to remember what's possible, especially during a bull run. The bear markets last just long enough for us to almost forget about the potential. It really does just take a few big wins that can eclipse some of your biggest losses. During a bull run, if you're able to get two 5x's back to back, that's a 25x return. If you're in the right assets and you do time it right and simply wait, you could play it very well. And there's nothing wrong with taking a break from crypto or Twitter or YouTube or anything like that during a bear market whatsoever. Even if I take a little break from Twitter or YouTube or anything like that for my own mental sanity, I'm still paying attention, I'm still accumulating when and if any alts go to new lows or trigger any alerts. And at the same time, for anybody that does want to quit, I don't blame you one bit. But I'm not going anywhere because that's usually the most important time to accumulate and research when the majority want to quit. And just like we showed examples in previous videos, catching the first couple waves of the bull run or even just a big retracement from the lows is the most important move to catch. And in all seriousness, I hope you guys absolutely crush it when that time comes. And alright, just a few more things. We'll try to keep this video short and sweet, and please stay tuned for future videos. So Ripple just put this out: 5 crypto myths no business leader should believe. Myth 1, crypto is a fad. False. It is here to stay. Yes, there are scams. There's going to be a lot of alts that don't survive, but there will be legitimate winners that rise from the ashes. I encourage you guys to check out this article. We're just going to speed through it, but be sure to check out some of these stats. Myth 2, crypto is risky and volatile. Although crypto is volatile, what's more risky? Transacting with the US dollar for 2 to 5 days and that volatility between different FX rates, or transferring a liquid digital asset in 3 to 5 seconds? Myth 3, crypto is not sustainable. False. The XRP ledger, Hedera's hashgraph, and even Algorand's blockchain are some of the most efficient networks in this space. Myth 4, crypto solutions are complex and difficult to implement. Now, we have a Web 2 stack today, and we're building a Web 3 stack, but we're trying to build interoperability so the Web 3 stack can fit nicely into the Web 2. We can't just build amazing technology without any type of bridge. There was a recent interview of Casper's CTO on a YouTube channel called DeFi, and it was absolutely amazing. I highly recommend you guys go check it out. Once you guys watch that, I think you're going to be super impressed with Casper Network's actual tech stack, with its modular design and how easy it is to plug directly into the Web 2 stack. There's a lot of great projects out there, but they're not building the necessary bridges or dev kits to actually connect it, and enterprises don't want to do extra work. The best and most adopted projects in the enterprise space are those that are working with the enterprise to make it as seamless as possible. In Myth 5, crypto lacks regulatory clarity globally. So there's a variety of countries across the board that already have clarity to some degree. The United States is without a doubt one of the biggest laggards in this industry. We had some good news for Casper Network joining Now Payments Gateway, making it easier to accept Casper payments for your business. So interoperability is key. Also saw Mitch and Adrian sharing that there are another 440 merchants now accepting HBAR. In parabolic HBAR right here, over 3 million HBAR was migrated to Medico. Remember, Ripple the company acquired 100% of this custodian. So pretty interested to see if this is related to Archax with the tokenization of Aberdeen's funds sitting on Hedera's governing council. We know Medico is an absolute giant with some huge partners, and they're actually integrating with a variety of banks for crypto services. Also shared by Santiment, the top crypto development activity, so overall GitHub code commits. We see Kusama, Polkadot. I'm excited for that ecosystem to recover. We got Cardano, we have S&T, Hedera, Link, Atom, ICP, Decentraland, and Ethereum. Remember that Casper Labs is on the Linux Foundation with some of the world's largest companies: Meta, Microsoft, Oracle. We have Cisco, Citrix, Google, Panasonic, Toshiba, which is interesting, and we'll dive into that in a future video with their partnership with IPWE, which is a Casper partner. Sony, Dell, Uber, Toyota, Alibaba, Accenture, Capgemini, Capital One, and Casper Labs. And also CZ sharing Hong Kong moving forward. So what's interesting, by Wu Blockchain, Hong Kong rating agency, the HKVAC, announced its virtual asset index. They have Bitcoin, ETH, stablecoins, some wrapped tokens, but also Bitcoin Cash, Litecoin, BNB, Matic, ADA, Atom, Filecoin, Near, Algorand, ICP, XRP, Doge, Polkadot. So I'm happy to see XRP, HBAR, ALGO, QNT, and a few others in this list. Remember, Algorand just had a recent upgrade of 10,000 transactions per second, including a 3.3 block time with finality. We have Matt here, the COO of Casper Network, sharing that they're at the Actus conference in DC. We have this right here shared by Casper.
Anyone who's been in the financial world knows that financial contracts are the molecular building blocks of the finance system. And so Casper, for example, is using the Actus standard as the computational core for their tokens or smart financial contracts.
So that's a big deal, with Actus being one of the 3 largest data standards in the world, side by side with FIX and ISO. And last but not least, we have iTrustCapital sharing. There are about 45 million American crypto users and 420 million global crypto users, still under 1 billion as of 2023. And I know it's fun to compare the amount of crypto users versus the internet users, but we have to understand, even this amount of crypto users, they're not using it at scale with utility. Most people are just mom and dad buying Dogecoin and holding a little bit on Coinbase. So the point I want to emphasize is we have not seen utility or even these dApps or applications running at scale. So with 400 million users, I would like to see 400 million users actually being involved in using crypto rather than just buying $30 a Doge on Coinbase and holding it for a few years. So be sure to check out iTrustCapital. This is linked in the pinned comment in the top of the YouTube video description. If you use that link to create a free account, you'll also get a $100 funding reward. So I've been using this platform for over 3 years. I personally have a Roth IRA, meaning 0% in capital gains or paying 0% in taxes. So I hope you guys enjoyed today's video. Much love, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.